so much for joining.
Thanks, Jesse. Thanks, everybody, for taking some time to listen to the most exciting topic in all the world, and that will be accounting. Congratulations and kudos to you guys for being startups and being in that world. It's both exciting and terrifying at the same time. I know because I have my own accounting firm. I've been in business for 10 years, and I know what it takes to start a company up and to go through the highs and lows of having a business in your hands. So yeah, today we're going to be talking about just the basics about accounting issues. Generally speaking, most people who start up a small business, unless you're starting an accounting or financial type of business, probably don't have any technical accounting training. And one of the biggest mistakes that I find that people make when it comes to this world of accounting and finance is that you don't know what you don't know, right? A lot of people think it's just a matter of numbers. And what I would just encourage you to think about is that it's not just about numbers. Numbers are hugely important. You can't run a business without numbers. There's no doubt about that. I'm going to guess most of you guys watch Shark Tank frequently. I know I watch Shark Tank all the time. I binge watch, and there's a lot to be learned from watching something like Shark Tank. Numbers are hugely important, but there are things in the accounting world that have nothing to do with numbers, and that's called compliance. You have compliance issues that have to be considered. Compliance, the big one is tax preparation, right? If you have a business, if you make any kind of income, no matter what it is, you have to file a tax return at the end of every year, right? Well, that's called compliance work, right? You are compelled to file a tax return every year. So unless you've been trained in tax preparation, especially business tax preparation, there may be things that you don't know that you got to look out for and report on. Other things like, and I want to get this one out of the way, is sales taxes. We are finding that a lot of small businesses who are engaged in the shipping of product to other states, overseas, whatever it is, or even selling a service maybe to somebody in another state, you may wind up with a sales tax issue. And what we are seeing is that some of the states in the United States have very complex sales tax issues, right? Now, we're talking about sales taxes. We're not talking about numbers. We're talking about compliance. You sell something to somebody in the state of California. You ship a product into California. Guess what? You probably have to report that to the state of California. You have to collect the sales tax on that sale. And every once in a while, they'll tell you when, you have to file a sales tax return and pass that sales tax that you collected onto the state of California. Again, that's not a number issue, that's a compliance issue. And so a CPA, an accountant, is not only going to be dealing with numbers, they're also going to be dealing with compliance issues. Yeah. We're not going to be talking much about compliance issues today, because today it's about pure accounting. But I just wanted to get these types of things into your heads because it is hugely important. There's a guy, I'm in Lansdale, PA. About a year or two ago, there was a guy, it's 2 years ago, in Bucks County, not too far away from me. He's an Amazon reseller, I think it is. He received something like a $1.2 million bill from the state of California. And he's like, well, why am I getting a bill from California? Turns out whatever he was shipping into the state of California, and did not know that he had to collect sales tax and pass it along to the state. California found out about him, and they sent him a $1.2 million bill. Now imagine being a very small business, in business maybe for a few years, and you get a $1.2 million bill, right? That's pretty intense stuff right there. Again, it's not a numbers issue, but it's a compliance issue. So game over is right. So I say that to tell you that you have a business, you're going into business, you need three things. You need a lawyer, because you got to deal with the complex issues of having a business, especially if there's more than one owner. Once you have more than one person involved, you have better get a lawyer involved. The second thing is a CPA. CPAs are hugely important with helping you decide on the entity structure, how you want to be taxed, how you get it reported, all that good stuff. And the last one is an insurance agent, right? A lot of startups work out of their homes. They're dealing with their townships, and you may use personal vehicles for your business. There's a lot of stuff that you start to intermingle at the very beginning until you make enough money to break things out. Guess what you need is an insurance agent to help you understand the risks that you have by doing things the way you're doing them or you want to do them. So it's basically risk management, right? You do those three things. You have those three professionals in your corner. You just saved yourself a world of hurt, right? And then on top of that, you're gonna have your bankers, for lines of credit, all that good stuff. So I deal with numbers all day long. I deal with clients' accounting and finance issues, but you cannot believe how often I am dealing with these types of compliance issues because the business owner was not aware of certain things that have to be done in order to run a business that can be considered under the accounting umbrella. All right.
Can I interrupt you right there, Joe?
Anytime.
All right, well, I just wanted to share a personal story. Like, our company just switched our website providers. So originally we were on Squarespace and we had an add-on to collect like sales taxes, things like that. My team was like, all right, like let's switch over to Shopify. It's better for e-commerce. We're actively selling. And then I was talking to Joe, or I was talking to someone on Joe's teams, and he's like, okay, like, have you guys been collecting like your sales tax? And I'm like, oh my gosh, like we have not. Like it's so helpful to have someone, to have an accountant or like a team of accountants like working behind you to like keep you in check, because like it's so, like it was so careless, but like not, like it's not on the top of my mind. I'm just like, oh, I just want to like open up my store and like get sales. And yeah, that's a perfect example of how you've been helpful to my business specifically so far. But it could happen to anyone. Like I want to pay my taxes. I don't want to get in trouble, but like, someone didn't do the plugin before all that happened.
Right. You don't know what you don't know. So
Exactly.
you want to have people watching your back, from a legal perspective, whatever. That I unfortunately, scroll through Instagram a little too often, and there's this one thing that comes up. We always shows a mother with a small child behind her, behind the small child, and it turns out to be a lioness, with the baby in front and watching the back of that baby lion or whatever. That's what a CPA should be doing for you, right? That's what your lawyer should be doing for you. They should be watching your back to make sure you're not making any missteps that can be very, very costly. You have no idea the types of tax notices we receive, penalty notices, punishment notices, things like that. And it's scary to get a letter saying we're coming after you. That could have been prevented had you had a professional watching your back. The problem is that a lot of small businesses, startups have a problem, right? It's called cash flow. And the last thing somebody wants to do is spend cash on, what's not absolutely essential to get the business off the ground. And by that, we mean, CPA maybe. A lawyer is much more essential in my opinion, but a CPA is right up, is a close second to an attorney. So so you just have to work it out and speak to a small, startup type of accountant who's willing to work with you and work something out and stuff like that. But if you're going to do something yourself, if you're a DIY type of person and you have a startup, just be advised that you may be setting yourself up for a world of hurt by not at least getting counsel. For 1 hour of a CPA's time, for 1 hour of an attorney's time, you can walk away with a boatload of advice and information and things to watch out for and avoid. All right, so we got that out of the way. I just like to get prepare people and get them thinking about what they don't know. So today we're going to be talking about accounting. So accounting is another thing where a lot of people think it's just numbers. And yeah, numbers are the pawns in the accounting chessboard. You just got to know where to put the numbers and what the impact of putting those numbers in that chessboard is going to be. So another mistake the small business owners make is they do their own bookkeeping and accounting. Now, I'm a CPA. I've been trained in accounting since I'm 64 next month. I'm going on like, 40 somewhat years of being in the accounting and bookkeeping world. And in my company, I let my bookkeeper do the bookkeeping. I don't do the bookkeeping because my job is to grow the company, similar to you guys. If you're a business owner and you're starting it up, you are the business development guys, right? And gals. So your job is to grow the business. You got to get the sales up, get sales in the door, develop the clientele, all that good stuff. So the worst thing you could do is spend your time on stuff that does not generate a revenue and value. However, you do need to know what financial statements look like and what story they tell you, so you can have an intelligent conversation, obviously, with your accountant. And if you're doing that on a regular basis, you've got no surprises at the end of the year. Trust me, you want to avoid those, nasty surprises with taxes and stuff like that. You need to know what your numbers are on a regular basis, because if you're doing something wrong and your numbers are telling you a story and you're not listening to that story, and you're not paying attention monthly, you could actually go months with losing money and not knowing you're losing money. And you may just be looking at your bank account, which is something every business owner does, right? You're okay if you can meet payroll, if you got the cash to pay a bill, whatever, So, but it is possible to be coming into trouble financially by not watching your numbers. And there's certain metrics you're going to want to keep an eye on. We're going to show you some stuff. It's very cool stuff. Everything I'm going to show you, I did not develop. What I'm going to show you, I went right to the internet. I went to the SCORE website. In the SCORE, they have a ton of tools that you could use to help you crunch numbers, help your accountant crunch numbers, help you understand what it is you're looking at. Up until last month, I was a consultant with the Widener University Small Business Development Center. The Widener SBDC, in fact, the SBDC is a nationwide concept. Pennsylvania has a bunch of SBDCs. If you have a business in Pennsylvania, the Pennsylvania SBDCs will work with you for free. And I was providing all kinds of advice, including what I'm going to be presenting to you. I was presenting this to scores of small business owners, and there was no charge to them. So that's one way to soften the blow of getting a professional to help you at a cost-effective price of $0, right? So I would encourage you to look up the Small Business Development Center near where you are. If you are anywhere near Philadelphia, Widener University is one, Temple University is another one. Kutztown is the main one in the state right now. But go in there and you'll get all kinds of help, like marketing, financial, importing, government, contractual, all that kind of stuff. Since I'm a CPA, I was fortunate enough to help to provide clients with accounting and tax advice, along with capital acquisition. My title was capital acquisition consultant.
Joe, quick question.
Yes,
For like the SBDCs, do you have to be incorporated already or have an LLC in order to engage with them, or can you be like in the idea stage?
It could be in the idea stage. As long as it's a business related issue, just sign up for free, ask to have somebody contact you, and we'll contact you and get you going. And there are many times that I actually help people create their own LLCs. And they just said, this is what I want. We talked about, well, LLC, non-LLC, partnership, C Corp, S Corp, we had those conversations. And then when we landed on a decision, I would help them. We would do a Zoom meeting and I would walk them through the Pennsylvania website and create a company for them right on the spot. And the state charges $125 to create an LLC, right? And my time was free because Widener was paying me. And so $125, we set up a company. And since I pretty much know what I'm doing, they got very high quality liftoff.
No, I would really recommend, like I use Temple's SBDC or Small Business Development Center, like very early on in the business, and Joe's 100% right. Like they're basically offering like free consulting services, especially, I guess, just like for a pulse of the room, like who actually is incorporated in here? or is like thinking about, is anyone looking to incorporate?
Yeah, both.
Yeah, I would say that's a great starting point. I don't know virtually, but there's at least like 4 people in the room who are looking to do that. Does anyone have questions on like the different types of corporations? I know that's kind of random, Joe, but that might
I'm
be
good.
good to, can you like give us a little overview on that?
I could do that. I do this for a living, so it's in me. I don't have to prepare. So there are different types of companies. Each one has a different type of tax impact. I would say this to you, and I'm sure you guys are all doing this, but let me just say it. Do not run a business without some kind of liability protection. In other words, at a minimum, be a limited liability company, an LLC. If you're running a business as a sole proprietor and you don't want to spend the $125 that it takes to get you some kind of liability umbrella, liability protection, and in the future, if something goes south and you wind up losing your house because you did not have proper liability protection, you basically did it to yourself, right? It's so simple to create a limited liability company. So the easiest company to create is called the sole proprietorship. A sole proprietorship is just, you wake up one day and say, I'm in business. So if you think about a babysitter who puts herself out to, take care of little kids and charges $10 an hour. Well, that babysitter is in business. She's a sole proprietor, right? She's not getting a paycheck. She's getting cash for her services. She doesn't have to register with the state because a sole proprietor can just run a business out of their home or whatever. You don't even need an EIN. You can have a social security number. You just start up one day and say, I'm in business. You go to the bank and say, I want a sole proprietorship checking account, and you're off and running. And then, and then at the end of the year, you have a profit. You pay taxes on those profits on your personal tax return, the 1040. So that's the simplest way. I strongly recommend against running a business as a sole prop. LLCs are not new, but they're relatively new. I mean, 40, 50 years ago, I don't think you heard of LLCs, but they're very common now. And by the way, they are the easiest and the most popular form of business entity today. Now, as far as an LLC is concerned, that same person wakes up in the morning, says, I'm in business, I want to have my own business. So you can go onto the Pennsylvania website if you're a Pennsylvania resident, right? You would want to have a Pennsylvania LLC. Not so sure you need a Delaware LLC to have a simple small business. You live in PA, set up an LLC, pay the $125. You can actually do that online, and it takes about 7 to 10 days for the state to assign you an entity ID number. And in essence, they're saying, okay, thank you for your application to set up a company. You got to make sure that the name is not taken. There's a process for that, but basically it's very easy. I've done so many of those. It's easy. You get the LLC set up. Use your home address as your registered agent address. By the way, when you set up a company with the government and with the Pennsylvania, you're actually going to be setting it up with the Department of State, not the Department of Revenue. The Department of State is where an entity is created. So once you create your company with the Department of State, guess what's going to happen? They're going to sell your information to some ne'er-do-wells who will get your name of a list of new businesses, and you're going to get a notice in the mail that looks so official and says, you need this and this and this to be compliant. And you're going to pay $50, $75 for something that you don't need. Something like a registered agent. You need a registered agent. Well, if you have an address inside Pennsylvania, and you live in Pennsylvania, your business in Pennsylvania, guess what? You don't need a registered agent. However, if you're going to create a company in, let's say, Delaware, then you need a registered agent in Delaware, because Delaware is going to say, we need an address in Delaware to which we can send your official mail, official notices, things of that nature. But if you're in Pennsylvania, living in Pennsylvania, create a Pennsylvania LLC, you don't need a registered agent unless you want to be like anonymous, in which case that might work for you. But most people that I work with don't worry about that stuff. But you might want to be anonymous, in which case you get a registered agent, so nobody has your address that they can reach out to you and find you somehow. But your address can be your store, if you have a storefront, a WeWork address, a virtual address, anything like that could be your address, and that satisfies the registered agent requirement. But you register with the Department of State. Once you do that, you're going to want to get an employer identification number. So let's say my company, we'll talk about me, all right? I created my company as a single member LLC, not a sole proprietorship. I know CPAs 10 times smarter than me, which is not hard, who have created their own companies as CPA practices, and they don't have LLC protection. They just operate as sole proprietors. So it can be done. However, I wanted a single member LLC because I wanted liability protection. So I created the company, got the liability protection. I had two choices: go with my social security number as my taxpayer identification number, or go to the IRS and get an employer identification number. I always recommend an employer identification number because you do not want your social security number floating around out there more than it already is. And let's face it, it's floating around out there. So, you get the employer identification number. You've got your company set up with the state. You go to the bank, open up a bank account with that paperwork for the company, EIN, organization documents for the LLC that's what it's called. You go to the bank and say, I want to open a bank account. And with that information, 99.9% of the banks will open up a bank account for you in the name of the business. So that's a single member LLC. But there's something called a multi-member LLC. And a multi-member is simply, there's more than one owner. In an LLC, you're considered a member, not a shareholder. So in a single member LLC, you're the sole member. In a multi-member LLC, you are a member. You can have a manager who's a member. You have a member who manages a company, and everybody else might be just, an average general partner type person. No matter how you slice it, two or more members in an LLC is going to be a partnership.
I have a quick question.
Sure.
for two things. The whole purpose of having your social security number and your EIN separate is so they can't go after your personal assets. No.
The social security number is just an identification number, right? So if you without LLC protection, your personal assets are fair game. You can have a single member LLC. You might opt not to have an EIN, just say, okay, I just want my social security number, because you're going to report the activities for that single member LLC the same way that you're going to report a sole proprietorship, like the babysitter, right? You're both sole proprietors. The IRS says, we don't care that you're an LLC. As far as we're concerned, you're a sole proprietor. But keep in mind that the LLC designation comes from the Department of State. It does not come from the Department of Revenue. So the LLC is not a tax issue. It impacts the tax issues, but an LLC is a legal issue. That's why the Department of State deals with the legal issues of a company. So you could be an LLC all by yourself, use a social security number, and when you file your tax return, you'll file it on Schedule C of your 1040. The same way that a very successful babysitter is going to report her income. Schedule C of your 1040. The difference is that if the babysitter does something negligently and is of age, over 18, and a child is harmed or dies at the hands of a babysitter, and that babysitter, let's say, is married with a house, guess what they're going to go after? They're going to go after her house. Whereas with an LLC protection, that same babysitter has an LLC, and something happens, the worst that can happen, unless there's some kind of criminal activity going on, the worst that can happen is that they'll go after what's in her checking account or inside her LLC. So that LLC creates a barrier between you and between your personal assets and a lawsuit or something to that effect, right? Social security number notwithstanding, nobody cares. It's the LLC umbrella that you want. So, If somebody came to me and said they want to be a sole proprietor, I would fight them tooth and nail on that. I would say, no, you need to be an LLC,
Yeah.
and so, and then if they insist on being a sole proprietor, I would question whether or not I'd want them as a client, because then the elevator may not be going to the top.
I think we have another question from
Sure.
the room.
Yeah, I have a question. So when I was talking to somebody about my company, they recommended that like I look into like a B corporation, and I was wondering like apparently it's special, and I was wondering like why that is or like what it is.
Did you say a C as in
A
cat?
B, as B as in boy.
B Corp. B Corp.
Yeah, now I'm not that familiar with bees. It's come up a couple of times in the past few months, so I haven't boned up on it, but I will tell you that a C corporation, an LLC, those are the two main ways to go. I don't know that a B corp, I forget what it is now, but a B corporation is some special impact. But when we do tax returns, and we do hundreds of tax returns, okay, we've never done a tax return for a B corporation. So I can honestly say I don't know much about B corporations, because the vast majority of businesses are either an LLC with one or more members, or a C corporation or an S corporation. There is no tax return that we ever filed that's a B corporation tax return. So can you tell me what it is that about a B corporation that you're hearing about that is attractive?
No, I didn't look it up, but when I was talking to somebody about my business, which
Are
is
you an
like
artist?
No, I'm someone like, well, my business is looking to help like prevent burnout. It's going to be a wellness retreat for corporations and institutions. So somebody, when I was telling them that, and they also suggested working with like insurance companies and like unions. They also suggested like looking into a B corporation. And we didn't have the time to really talk about it in depth, but he said to like look into it.
Yeah, the B corporations, if I recall correctly, it has something to do with mostly with artists who B Corp is a benefit corporation, must have a social purpose. So somebody just posted that. Thank you, O'Neill. So a social purpose. That probably explains why we don't see any of those, because we do most of the commercial activity. We do have nonprofits that we work with, and those are created for social purposes. But that's a very unique item. I've been doing this for 10 years in private practice, and I've never come across a B corporation.
Yeah.
So it's.
But that doesn't mean that it's not valid, because it's something that may be new. I mean, there's some new stuff going on now that artists use a special type of company to manage their businesses, to manage their royalties and stuff like that. So that's in the stratosphere arena, if you will. But I can't answer the question about a B corporation, because I just never had an opportunity to work with one.
Did you have something to say?
Yeah, so I was also told to look into it, and I looked into it. There's good guidance on the US Chamber of Commerce. But the reason why an accountant's never distinguished is because for tax purposes, it's still a for-profit. So you still behave like an LLC for legal and tax purposes. But to become an official B Corp, you have to pass like an assessment that says that you're all about the triple bottom line. Like, and the advantages are mostly about attracting like-minded people and having
grants and funding and stuff.
Yeah.
Well, it depends on the grant maker. If they're open to B Corps, you have more access to certain funders. Some funders are just going to give to nonprofits no matter what. But yeah, it's like this middle space.
What I would
But legally, it's not a great space.
yeah, I was just gonna say, like, I've heard about B Corps before too, and the one thing just to take into consideration is like we haven't even talked about corporations yet, which is the most typical organization like investors want to see if you're thinking about taking on like outside capital from a venture firm. B Corps, like you're gonna have to have a board, and you're gonna have to have certain standards for that social impact that Anne was talking about. So it's one of those things where as a single, you could always change your incorporation status as you grow. So it's not to say that it's a bad idea to start as a B Corp, but just know that you are adding more work to your business early on.
Right.
But say once you have 10 people and you're like social impact, sustainability, those are core factors to my business, you can always flip to it. So just keep that in mind, that like it's not a permanent status. Like I was a New Jersey LLC, then I became a Delaware LLC, now I'm a Delaware C Corp. So it's not a bad thought. It's actually a really great cause to consider, especially if those are like the types of clients you want. But it's a little tricky if it's just yourself running the business, because it's public record and you have to show how you are showing that bottom line.
Can you also switch from a corporation to a nonprofit? Does that work? Is
Yeah.
that as easy?
Yeah, no,
Okay,
it's,
good.
well, I'm in the process of switching from a nonprofit to a for-profit right now.
Okay.
Why is that? I'm interested.
Because of some of the things Jess meant, Jessica, do you
Jess,
know?
Jess,
is fine,
Jessie,
okay,
yeah,
Jessica,
sure.
Jessie. I want to get the nickname right. Because I learned a lot this year about the time it takes to do grants, and also that the landscape for foundations, there's a consolidation happening in philanthropy that makes it, they want people that they're not, it's not the kind of landscape that favors startups, frankly. Like that wasn't my experience. You may have a different experience. And also it takes a lot of time to recruit a board. And when push came to shove around structuring my compensation, I didn't want to do all the work and turn over the power of my compensation structure to a board that could vote and change the bylaws whenever they wanted. And there was some question around like whether or not I should be on the board as the founder, and I'm the founder, it's my vision, right?
Yeah,
And so it gets tricky. So I decided to stay with an advisory group, which is, it may satisfy the stipulations around a B Corp if you have an advisory group instead of a board. But there's all kinds of it was just a huge time suck, recruiting, managing the board, agreeing on bylaws, agreeing on compensation, conflict of interest policy. It's really involved.
yeah.
Yeah, and you need a you need a grant writer. They cost $100 an hour, a good one, if you're gonna. So yeah, I mean, I didn't want to be a fundraiser, and that's what being a nonprofit means, that you need to be like fundraising all the time instead of business development.
Can you still get grants as a for-profit
Yes.
company?
You
So
can,
it's not
but
that you need to be a nonprofit to apply for a grant?
There are definitely grants that are for, I've gotten multiple grants. Like that's my favorite way to get money for my business, is just, it's free money. There's programs like Joe's laughing, but like it's really the best way to get money. And like there's tons of grants out there for small businesses, women-owned businesses, minority-owned businesses, businesses in tech, like
right.
especially now after COVID, like there's a lot of corporate grants that are out there too. So totally applicable for-profit businesses. They have their own
these grants.
What?
We should make a list of these grants.
Oh my gosh. Yeah, I was gonna say like there's yeah, that's a great idea. I actually just got a list yesterday that I can share. So that one's particularly to female founders, but
That's great.
I'll share that out there.
We were all female.
Yeah, in the room today, the women are holding
The
it down.
chat's blowing up.
Yeah, so please make a list. All right, I got it all. I'm gonna get on that
Answer
right
your
now.
question, like it's not a transition, like you had to shut down your nonprofit and end it, close the bank account, and then open up. I'm going through it right now. I can talk to you offline. It's like, you can't just move things over. You have to
Okay.
shut everything down.
And
Start
start
over.
over.
Yeah.
Got you.
Yeah.
That's really interesting.
All right.
Thank you.
Sure. No, that was a great discussion.
That was a great discussion. I learned something. I will say though, that I think that the B corporations, tax wise, is no difference than a C corporation.
Mhm.
So keep that in mind. So it has something more to do, it seems, with social impacts and stuff like that. So, so back to the LLC, right? So I'm not a lawyer. I cannot give legal advice, but I can give people a heads up and something to think about. And that is, if you're going to run a business, run it as an LLC, get yourself liability protection. And this way you never really have to worry too much. I should say never, but you don't have to worry too much about your personal property being taken away from you in the event of a lawsuit or something like that. However, if you're in the professions like the legal, doctor, medical, accounting, it is possible that you may be held to a different standard than the average, business owner. What I would say to you is your startups, for the most part, as I understand it, this may not apply to you, but one thing to look at is a trust. The trusts are relatively easy to create. You just go to a trust lawyer and you can actually sock all your personal assets into a trust and get them out of the hands of lawyers who may want to go after you in the event that you kill somebody in a car accident while conducting business, which can happen. And when I said earlier about talking to an insurance agent, if you get in your car and you're driving to the post office to mail a package, that's a business trip, and you run somebody over, that may have implications for you. I like
It's honest, like it sounds like that's never gonna happen to me, but like I think Joe's 100% right. Is like you have insurance is a factor that you need for your business because you never know. Like I was just thinking about this. Like I just took a road trip with my team to Boston, and like we're using a personal card. I was like, earmuff Joe, like, like there's a lot of liability with that. And I have general liability insurance. Like I put my company, like, our car like under that, because you never know like what could happen. And especially if it's like, hey, like I'm telling my team, like we're going to Boston, this is for work.
Right.
It's for the worst case scenario.
Yeah, so risk management is what we would call that, right?
Yeah.
So if you're running a business, you have to have risk management considerations that you want to take care of. And usually just very beginning of the business, you sit with a risk management expert, insurance agent, and have conversations about what if scenarios and try to address those, and make sure your personal assets, you have a personal umbrella policy, things like that. If you have a partner that relies upon you financially, life insurance, the event that you die, and there's a loss of income as a result, the family that you leave behind, they're taken care of, stuff like that. So speaking to the proper financial consultant and advisor, you get these things out of the way, right? So in any case, that's all part of the risk management profile. LLC is risk management. You're preventing somebody from attacking your personal assets, and it's that we call that piercing the corporate veil. And corporations, although the C corporation, usually that's what applies to, but now because LLCs are so popular, it's the same concept. You're piercing the corporate veil. You're bypassing the protection of the LLC. And once a good lawyer, by the way, does that, they can clear the way to go after your personal assets. So at a minimum, you need an LLC. At a minimum, you need adequate insurance to protect your business interests.
I think we have another question, Joe.
Sure.
So the question that I have is like, what is first? Because when you are in a startup and maybe you have enough money or enough savings, but you are starting something. So if you see that you are gonna put money into insurance, a lawyer, and then accountant, consultancy, like maybe you will spend the whole money that you have and you didn't do anything MVP or something that most of the startup incubator are asking for. So in that case, what should be the recommendation? I know that the question is kind of hard or difficult, but what should I do, or how I know that every business or every startup is different, so we need to cover what you say, the risk management. We need to do the risk management, but according to your experience, how we can start? What is first? So.
Yeah, no, that's a good question. So, and that kind of ties into what we're going to be talking about in a few minutes about the financial statements and cash flow statements and how to, and the numbers, right? So, what I would say to you is, I mean, it's a rather unpleasant statement that I would have to make, but what I would say to you is that unless you're financially ready to go into business, you shouldn't go into business, because then all you're going to be doing is trying to scrape together money. It's not enough just to have a great idea and a great concept. Cash is king. Cash is the lifeblood of every business. Without cash, you're not going to hire employees. You're not going to rent a spot. You're not going to have, materials and supplies that you need to get a business off the ground. So cash is king. And I would submit to you that certain things are a prerequisite. So for instance, do you need a lawyer? Well, if you're going to be a single member LLC, it's just you, you're not going to have a partner, then you can probably get by without getting a lawyer. But you might need a lawyer if you're going into an industry that is that might have regulatory issues that you may not be familiar with, medical issues, right? Like you may be a medical supplier or something like that. Anything medical, you have to seriously think about lawsuits, right? So what I would do is, I'm starting a business. I would get $250 together and go spend 1 hour with a lawyer, or look for these. There are legal. They're not called legal aid societies, but there are organizations out there that specialize in providing legal assistance to startups and lower income people, right? And you can just do whatever it is you need to do to spend an hour with an attorney, just to kick the bucket around and say, what do I need to watch out for? Because as I said earlier, you don't know what you don't know. And the very last thing you want to do is scrimp on $250 with an attorney that may wind up costing you $25,000 or $250,000, right? So just talking to an attorney about, it's anything I got to look out for. It's as simple as that. I had an attorney, I had a labor issue with somebody once. I spent $100 just to talk. $100 very well spent. I walked out saying I don't have to do anything, right? Instead of trying to figure it out myself, because I don't know the law. So if it's a single member LLC, a very simple product that can't hurt anybody, then maybe you can scrimp by without a lawyer. But $250, that's probably 1 month of the cell phone usage, right? So you would have to find that. It's just a basic, in my opinion, requirement. CPA, same thing. We do consulting all the time. So, we'll charge somebody for consultation. And we'll say, yeah, look out for this, look out for that. If it's a simple matter, a simple business, yeah, create the LLC and be done with it, single member LLC. But I am warning you, if you go into an LLC with a partner, you better get a lawyer to draft a partnership agreement.
Can you repeat
I
that?
cannot begin to tell you how many relationships went really bad because two people who loved each other, sounds like marriage, two people who loved each other went into a partnership and it went south and they became bitter enemies.
Yeah,
see
like
that
if you're going into business with someone else, like have a partnership or equity agreement.
Okay,
If you're if you're starting the business together.
right.
And my personal suggestion, just from seeing how other people play out, someone always needs to own more, 51-50 or 51-49. Like I know everyone's like, let's be fair, let's go 50-50, but no. Like someone at the end of the day needs to be the decision maker, even if it's 1% more than the other. Someone needs to be like the head that's like, I'm gonna be the final say if we disagree. Wait,
Yeah, Marco.
Yeah. Marco.
There was someone
Yeah.
who wants to share something in the chat. Sorry.
Oh, there was like another question in the chat. And yeah. Hey.
Hi, beautiful people. You can see me.
Yes.
Yeah, so for example, say for me, right, how many of us I'm a social impact consultant, executive coach, and I do like audits, business audits for startups and whatnot. So I'm about to open my third business, right? So like a tangible example that's literally happened within the last 30 days. So in the last 30 days, I drafted up a business model, my business plan, figured out the teams that I need to have. When Mr. Reyes was talking about like there's like legal associations that you can be a member of. Say for instance, there's something like as Legal Shield. I use Legal Shield to set up my LLC. Why? The reason being is because I'm opening up a social impact center, which means I need real estate, which means I also need I need a lawyer. But more specifically, you also want to find people who are in like specifically in the industry that you're in. So I looked for a real estate lawyer that focused on commercial buildings to like look over my lease, to look over my contracts that I'll use with vendors and whatnot. And also for like the strategic partnerships and like the co-working memberships services that I'm going to provide out of this place, right? And when it came to like how did I fund it, to go back to again to Leah's point, like I started already 2 businesses, right? So I truly believe in you securing some seed capital for yourself to do things in your business, but also too, America is a place where, yeah, people are like worth $1 million, but they're usually $1 million in debt before they actually become worth $1 million. So learning how to leverage debt very properly is very important. I secured within like 2 months, I'm literally like 4 business credit cards for my business, which equate to like about $80,000. It's only going to cost me like about 30 grand to start the business, right? Which is crazy, right? Because we're smart. And how I did that was because it's I have a real estate business. I opened up a DBA under the real estate business, and because I usually have business credit cards and open up a Duns and Bradstreet number and open up credit lines, which is basically like a business entity's like a credit score number. I use that, and along with my personal financial standing, because I was starting up a business that didn't exist yet, right, to secure these credit cards to fund it, right? So again, but that means I set my own self up personally so that I could best represent a business that wasn't even here yet for the people who were giving me the dollars. Does that make sense?
Yeah.
Okay.
Actually, what I tell people who are looking to start a business is, if you have a job and you're gonna need capital, going back to the earlier question, you're gonna need capital to start a business. Credit card companies, banks, whoever, more likely to lend you money or issue a credit line or a credit card if you have a job, they like that. Once you report to them that you don't have a job, so you resign your position, you can start your business. Then you go to the bank and say, can I get a line of credit? First question is, well, what's your income stream? Well, you can't tell them you got a job because you no longer have a job. You just nosedived your ability to get a line of credit, because a business is very risky in the eyes of bankers, right? So the best time to go for a credit card, a line of credit, if you have a job, is while you're still working, because you can truthfully answer that I have a job, I have a W-2, here's my paycheck, right? And then they're more likely to issue a credit card or line of credit to you. And then whenever later on you quit your job, you're still going to have the line of credit. You're still going to have the credit card, right? It's when you have a business that doesn't have a track record, businesses are unsteady income in the eyes of lenders, you are unlikely to get credit. So I always tell people, you want to go into business, great. While you're working, go get credit cards, as many as you can get. You don't have to use them, just go get them. Lines of credit, apply, do whatever you got to do, because there will come a day, unless you have a bang out business, there will come a day, it's going to be tight. And you're going to wake up at 2 o'clock in the morning in sweating, terrified that you're not going to make payroll in 2 days. Then what do? Well, employees don't like to not get paid.
Can I ask a question also?
So
Yeah, I was like, we got some more questions too.
Okay, so back to the equity agreement. So is that for like, if you start, like you create the idea together, or is it like, oh, one person starts the business and then, you know, you might want to bring somebody in like we were talking about, to kind of like help you create it, but like you're the original idea owner. So do you have to have that like still? Like, or is it like since it's established that that person came up with the idea first?
Yeah.
You know, when Facebook took off, there were some pretty angry people who were friends of Mark Zuckerberg, who were pretty pissed off that he ran away with the business. And it was and their attitude was, and their position was, it wasn't all Mark Zuckerberg. There's another business, I can't remember the name right now, but it's happened a few times where a business took off and became a billion-dollar company. Or if somebody had a hand in making that happen, it's one thing if the business is worth $10,000, you're not going to get a lawsuit. But when it's worth billions, people are going to come out of the woodwork and say, you know, we had a big hand in that happening, and we had an interest in that, and you know, we're suing you. We want a piece of the action.
Yeah.
So the dollars, you know, it's all about the Benjamins, right? So the dollars are going to matter. So I would say to you, if you're developing a business, this is why lawyers are important. If you chat with an attorney for an hour, 2 hours, and throw everything on the table so they can tell you what to look out for, you know, and if there's even the slightest possibility that there's going to be somebody out there who's going to come back to haunt you if you become a resounding success, you want to nip that in the bud.
Yeah.
You know?
I was just gonna add to this conversation too, like if you are starting your business by yourself, you own 100% of that business, right? Equity is the most valuable thing that you could give up in your business, because the whole plan is to create $100 million business, $1 billion business, if you want to go down that startup route. Even if you want to create $100,000 business that provides for you and your family, like a lifestyle business, that's still worth something. So like you want to hold on to your equity as much as possible and retain as much of it as long as you can. When you're a startup founder and you're like, all right, I don't have a lot of cash, but I have a lot of equity to give. You just want to be incredibly cautious how you give it. You talk to a lawyer to set this all up, and you want to do things over vesting schedules, right? A vesting schedule is like, all right, I found this awesome person. They're going to become my co-founder. I'm going to give them 30% of my business. That's a lot of equity. That, you know, if they're a co-founder, I can't offer them any pay. Like, you know, like you have to figure out what you're comfortable with. Like, I'll talk for myself. Like, I owned 100% of my business. My CTO owns 15% of my business because he's bringing a very technical role that I do not have. I couldn't give him a salary when we first started off, but that's how I paid him. But in our contract, there was something called a cliff, which is like for 1 year, he didn't get any equity. And after that 1 year is when it started vesting, which is like when he started getting his points. And then he got the rest of his 15% over 4 years. So it's like, this is how I retained him. This is how I vetted him to make sure that he was the real deal and actually stayed with my company. And then he did do that. He's been with me since I've ever started. And now he has 15% of the business. So it's just like, you want to like think about equity for key hires early on. And then you want to retain some sort of option pool, which is for like new hires. So like I have, I think I have like 14% equity set aside for new hires that I haven't touched. I haven't given to investors. Like that's my option pool. Lawyers will go through all of this with you, but it's really important to think of like, don't give this up at all. Or like, you know, hold on to it.
It's all part of the planning, right? I mean, so
yeah,
it all comes down to when you're starting a new company, planning before as you ramp up, right? Because once certain things are done, they're done and they can't be undone, right? So
yeah.
Talking to professionals is really worth the money, you know. So that's that. So all right, so we move on from we went from sole proprietor to LLC. Then we go to the next level, which is a corporation. And for anybody looking to take on investors, most investors are not going to want to bother with anything less than a C corporation. The state of Delaware is one of the most popular states in which to create a C corporation. And one of the reasons for that, as I understand it, is that the state of Delaware has over 200 years of determined case law, corporate law. It's a great place to litigate stuff like that. So I'm not a lawyer, but I just created a C corporation for another client in Delaware, right? So, so you create a C corporation if you want to have investors and stakeholders, right? If you want to have a simple LLC and you don't want partners, you don't want to grow past you, your partner, your spouse, whatever, then you don't need a C corporation unless you're making some really serious bucks. And then we can talk about tax planning, because tax planning and C corporations go hand in hand. The C corporation is very good to help with tax planning. Problem with C corporations is that you get hit with double taxation. The company makes a profit, the company pays a profit, pays a tax. Whatever's left over can be distributed to owners, shareholders, and as dividends. And once the shareholder gets a dividend, you take that dividend, put it on your personal tax return, and you pay the tax on that dividend. That's double taxation. Very unattractive for the small business owner. But all the major corporations do it, right? Because they take on shareholders. So one way to get around the double taxation of a corporation is to be an S corporation. So when you become a corporation, by default, you're a C corporation. If you want to be treated as an S corp, you have to put in a special application, say, I'm a corporation, but I want to be treated as an S corp. S corp eliminates the double taxation issue. You get the income gets taxed once, the company pays no tax itself. The income from the company goes to the owners, who are also shareholders, and these shareholders take they're not dividends, they're distributions, but they take that money, they put it on their personal tax return, and they pay the tax. Now, an S corporation can have like about 100 shareholders, and there are limitations as to the types of shareholders that can be part of an S corporation. So an estate or a trust cannot be a shareholder of an S corporation. So C corp, each entity structure has its pros and cons. And so when you're starting a business, you just want to be thinking 5-10 years out. What is it that you want to look like? I have a nice client. Some of you guys probably know the name. I won't say it, but they're in California. They started out as an LLC, and a few months later, they were taken off. They just incorporated as a C corporation, and we're done with it. And they just did a Series A, and they raised a boatload of cash. So, so some planning. What is it that you want to see? If it's a family-owned company, very small, LLC is fine. And by the way, let's say you want to take advantage of the S corporation benefits, because there are benefits, and that's outside the scope of the time we have left. You can be an LLC taxed as an S corporation. You can be an LLC taxed as a C corporation. What does that mean? That means that the problem with a C corporation is that you have to have annual shareholders meetings. You have to have a board. You have to have bylaws, corporate resolutions. There's a whole bunch of administrative things you have to deal with every year in order to maintain the corporate structure. An LLC is a very simple entity. You can just create it with a simple application to the state. But let's say you want to take advantage of the benefits of a corporation. Well, you can be taxed as a corporation. So it gets a little more sophisticated, but there are benefits, pros and cons. Each entity structure has its benefits and advantages and disadvantages. So that's a real quick primer on that. And then the nonprofits, it's another story. Problem with nonprofits is they don't make profit, right? Or whatever the company makes, it keeps in the business. And if you want to distribute it, you have to give it to the, let's say the main officers or the main key players. You have to give them money as payroll. And payroll is, it comes with very expensive tax situation. So you wind up paying payroll taxes, which are expensive, stuff like that, whereas you can play games with the LLC. So that's a real quick primer on the types of entities out there. There are different entities. You just got to sit down with your tax guy, your attorney, and work it out. When it's a simple LLC, probably a CPA is just fine. Legal Shield can help you with that. Companies like that can help you with that. We've seen that many times before.
We
Cost
have,
effective.
we have one more question
Shoot.
from the room. Or not just one more, but like another one.
Yeah, so Marco and I, who's in the virtual world right now, are looking to incorporate. My question is around when is the right time to incorporate? And then we're in a unique situation where he is Italian and I'm a US citizen. So do you have anything we should look out for or be aware of when we try to create a maybe multi-member LLC, I think is what we're looking at?
Did you say he was Italian?
Yes.
Okay, well, there are many foreigners who do business in the United States. All they need is an ITIN. They can't get a social security number if they're not residing in the United States. But if they're in the US or not, they want to do business in the US, they have to apply for a taxpayer identification number or social security number. Either way, they can do business in the US. They just have to file a tax return. The best time to start the company is as soon as you're ready. Get it out of the way, be done with it, move along.
Yeah.
Your number one job as business owners is to make the money. Develop the business development, sales, the whole shebang. That's your main job, right? So get all this stuff out of the way, clear the deck, and move on with business development and do what you got to do. That's my advice.
Yeah, there's another thing, like I'll add to that, just like I know during COVID, like we were talking about grants earlier and how like grants are a great way to get money. And sometimes they have requirements, like one, you do have to either be in some sort of incorporation, LLC or C Corp, S Corp, and they'll see how long, like I remember when like all the COVID grants came out, it was like, have you been in business longer than a year? So some of those have a stipulation. So like Joe's 100% right. Like as soon as like, once you're ready, like, all right, we're doing this, like take the time and effort to do it sooner rather than later. Cause then your start clock basically starts of like, oh, like you've been in business for 3 months now, or a year or 6 months. And then, yeah, like I tried to stay in LLC as long as possible for like those tax purposes. And then I was basically, because I was like, I don't want to have to do all these bylaws or board meetings and things like that, and get double taxed. But I was forced by investors. Basically, investors were like, nah, you have to do it if you want.
Yeah. So you get more opportunities when you're incorporated in terms of grants.
You can get grants as an LLC, but to get institutional money where it's not like I was able to get angel investors who were like, okay, here's a $25,000 check, here's a $50,000 check as an LLC. But now that I'm raising larger amounts of capital, like hundreds of thousands, they want to see me as a C Corp, and like that's opening the door for like bigger amounts of cash.
Okay.
So it's like like I said, I waited as long as possible. Now I'm like, all right, I want a lot more money for my business to grow.
Right.
And like that's when I transitioned over.
Yeah, you could switch. If you want to start small, don't know what you want to do, then LLC is fine. Investors want to see C corporations. They don't want to see, generally speaking, S corporations, LLCs. They want to see C corps. If you're interested in private equity, venture capital, might as well just get the C corporation taken care of and go from there. Speaking of investors, the things that they want to look for are financial statements prepared by CPAs, not by bookkeepers, not by H&R Block, right? They want CPAs preparing your financial statements. There are 3 basic financial statements that you need to be concerned with. They are the balance sheet, the income statement, also known as the profit and loss statement, and the statement of cash flows. The most popular income financial statement is, of course, the income statement. That's what everybody wants to know. How much money did we make? But an investor, a lender, they want to see the entire picture. And the income statement does not tell you the entire picture. And I'll give you an example. In 2020, you may have lost $100,000. In 2021, you may have made $100,000, right? Over a period of a couple of years, you broke even, right? That might be of interest to a banker or somebody who wants to invest money in your business. You can make $1 million in 1 year, and you go to a lender or an investor, that may not be enough. They say, great, you made $1 million, but do you owe anybody any money? Do you have $10 million in debt? So if you made $1 million, but you have $10 million in debt, guess what? You're very unattractive unless you've got a great business model or a product. So all sophisticated financial professionals, investors, bankers, whatever, they want to see the balance sheet. They want to see the income statement, and they want to see the statement of cash flows. The balance sheet is simply what you own, assets, what you owe, liabilities, and the difference between the two is going to be equity. So you're either overwater or underwater. So if you owe more than you own, you're underwater. So if you made a lot of money, but your balance sheet is showing that you're underwater, you know, they might say, well, you're starting to come out from underneath, but you're still underwater. And that may not be so attractive. But that doesn't mean that you can't get capital, because I have a client that, you know, they're running losses, but guess what? They're hot and they're pulling in investor capital like crazy because the potential is there. So, you know, financial professionals want to see the whole picture. The statement of cash flows is the third and least known financial statement. But a financial professional is going to want to see the statement of cash flows. And the name of the statement speaks for itself. The statement of how cash is flowing. So the business made money. Where did the money go? That's what they want to see. So those three statements are what all CPA firms have to produce every quarter for Fortune 500 companies and anybody else that is requiring a set of financials. So those are the three main items. Do we have time to go over quick snapshots of them, Jesse?
Yeah, we have about 15 minutes left.
Okay, should I do it?
Yeah, I think that would be helpful to see snapshots of all of them.
Okay, and so I'm going to show you that. But then the other things that the investors want to see, and I'll just spit them out, is a cap table. If you're a C corporation, they want to know who owns what stock. They want to know what your customer acquisition costs are. You got to be able to crunch that number out. They want to know what your lifetime value of a customer is. If you watch Shark Tank, this stuff, you know, you hear about this stuff all the time. They want to know what your cash burn is. So the statement of cash flow will tell you that. But the cash burn is how much money is this company running through every single month? And then what is the projection for that, right? If you're going to be going for investor capital, you're going to have to create what's called a data room. A data room is where you load all your financial statements, contracts, anything and everything that an investor is going to want to look at before they decide whether they want to lend you money or not. That's usually the venture capital world and the private equity world. An investor is going to want to know what your legal issues are. It's not even, nobody wants to invest in a hot company that has a looming $1 billion lawsuit coming at it, right? So you will be remiss in your financial responsibilities or fiduciary responsibilities to not disclose what your liabilities and what your risks look like. The investors want to know who your people are. Who are the founders? What are they about? What makes them so special to run a business? Can they do it? If I lend this company $10 million, are these guys capable of managing $10 million? Things like that. So they want to know who the people are and what they're capable of and who the key staff members are. And then finally, they're going to want to know market data. They're going to want to know, did you come up with a great idea on how to fix typewriters? That's great. Guess what? There's no market for typewriters, right? So market data is going to be important. What I want to show you guys, though, real quick, I'm going to talk in the New York fast talking way that I grew up with. I'm going to share my screen. I'm going to show you a couple of things that you should consider. And then I believe that Jesse's going to share them with you. So the first thing I want to show you here is, you guys see that? You see the score
Yeah.
screen? All right. So this little 3-page, I think it's 3-page document talks about the different financial statements. Let's for a second forget about the word projected, right? But let's just focus on the word financial, right? Financial statements. So there, like I just mentioned, there's an income statement. An income statement simply is what you is where you enter your income, what the expenses were in producing that income, and the difference between the two is going to be profit. That's a basic explanation of what an income statement is. An accountant, a financial professional, is probably going to want to dissect that a little bit more. And I'll give you an example. If you have a if you have a great business going on, right, and there are a lot of things, a lot of moving parts, or you can have income from operations. In other words, the main operation, the main business had a profit. But there might be something like, let's say you own Bitcoin, and let's say you're taking a bath in Bitcoin. You bought high, and now you bought it at 65, and now it's going for 50. Well, you have a loss. It's not a loss that you really incurred because you haven't sold yet, but it's called an unrealized loss. Guess what? Financial institutions are probably going to want to know, what else is going on out there. So it is possible that you can make a boatload of cash, but then have a boatload of losses that because you haven't sold yet, you haven't realized the loss, but a financial professional is going to want to know what is going on in that environment. So you could have an income statement that breaks things out by operations, which could be profitable or not profitable, or other activities that are not the direct business that can have an impact on the numbers. And so, but the bottom line is an income statement just shows the net profit of the business. And we're going to give a copy of this to you, so don't worry about following too closely on this. But the balance sheet, like I said, is you have your assets. You see that? I just highlighted assets. So if you take your assets, and that's one side of the equation, and the other side of the equation is liabilities and owner's equity. And because this is a mathematical equation, you can move, assets minus liabilities equals owner's equity if you're mathematically inclined. So the balance sheet will tell the general public, will tell you what it is that you own. So you may have bought a building, right, with a mortgage. Well, now you have an asset, the building, and you have a liability, the mortgage, right? The difference between the two, as you pay off the mortgage, right, you're going to be you're going to be having more and more equity, So, or if you refi the mortgage, and now you took all the equity out, you may have like negative equity. You could be underwater, or the value of the asset may go down because there was a flood and some kind of damage, and now the asset is not worth that much anymore, and now it's worth less than originally. So you can be underwater in that respect. So that's information that is very, very interesting to financial professionals, as well as the ownership of the company. And the cash flow statement, again, is where did the money come from, and where's the money going? So this document, we're going to give it to you. Just take a quick look at it. It's an easy read, frankly. But what's nice about that is that you can create not only the historical balance sheet, the historical profit and loss statement or income statement, and the historical cash flow statement. That's what CPAs do when they audit financial statements. However, as a business owner, yes, history is important, but as a business owner, you got to be looking forward, right? And you want to be budgeting and projecting, well, okay, we're done with 2021. What's 2022 going to look like? Based upon the data we have for 2021, can we plop that data into 2022? Right now, we're in November. By now, most major corporations are wrapping up their budgeting process, right? Why do people get laid off around Christmas time? Because the budgeting process is over. They figured out we need to let people go. And they don't do that towards the end of the year, right? So financial professionals are doing that very thing. They're projecting out what's next year going to look like. Some people will use the current year as baseline. That may work, but 2020 COVID was not a good baseline year, right? So you have to use assumptions and stuff like that. But You take your basic financial statements for historical purposes and then start translating that into what's the future going to look like. And that's where projected financial statements come into play. So, so with that, what I want to show you is a couple of tools, and we'll make those available to you so that you could see, you could work with a financial professional to generate projected financial statements. All right. So before I even show this to you, does anybody have any questions about the income statement, the balance sheet, or the statement of cash flows from what I just said? Okay.
I don't think so. I think we could go to projections.
Sorry?
I said, I don't think so. I think we could go to projections.
Right, okay. So this document, this is an Excel spreadsheet, and you can see all these tabs at the bottom, right? There's a whole bunch of tabs, and don't let that scare you, okay? This does not scare me one bit. This is my wheelhouse, right? I can play with this all day long. Because I'm a numbers guy, right? I can do this. But as a business owner, you're going to want to break down your business into consumable parts. So this Excel spreadsheet with multiple tabs, if you're going to look at it just, you know, from the start and just say, how do I get all this done? You're going to blow yourself out of the water. But if you take what I'm showing you here and sit down with somebody who's knowledgeable about, you know, the pieces of the business, you can start piecing together a projection. So in this particular case, this document, it comes from Scorp, it's a financial projection model. And what we did with this is you can, in this box, yellow box here, you can put down the name of your business, which is what I did. I'm really, really liking what Elon Musk is doing. I think space exploration is hot. I think there's going to be massive amounts of wealth that's going to come to you guys because in pretty short order, the world is going, the Earth is going to start expanding into space, and there's minerals and there's all kinds of beautiful things that are going to be happening out there. And so he's right on target with going into space exploration. So I named my company Space Exploration Materials Incorporated. And with that, you know, I just followed some simple instructions, but it took me to this screen here where I can start identifying the parts that I want to sell to NASA, right? So looking at this screen here, you see it at the bottom, it says 1A, projected sales, and then there's a 1B, projected sales. The reason for that is because we got 4 parts. We could have put it all at the bottom, but this is just for the ease of visual. What I want you to take away from this is not how to do this, but just, you know, just let the concept flow into your head about what does it take to set up a set of projected financial statements. This is more of a manufacturing facility situation, but it's also possible that you can do this with a restaurant. You could figure out, you know, all kinds of details about projecting sales, cost of sales, how much the coffee beans cost, things like that. The data is out there. A simple Google search will help you get there. You can get an average cost of beans. You can get cost of beans from Ethiopia to Guatemala, whatever, right? So the data is out there, but this is the more complex way to look at it, which I think you'll see how easy it is once you set your mind to just sitting down and thinking about stuff, right? So I put down Rocket Part A is my first product that I want to sell to NASA, let's say. And I calculated I want to sell it for $5,000. I calculate that my cost to manufacture it, and by that I mean in the manufacturing facility, you know, the factory workers, the manual laborers, what does it cost to pull that rocket part together? We calculate it takes about $1,000, right? And the difference between the two is called gross margin, right? Gross margin is gross profit. So when I put these numbers in here, somewhere in a few tabs over, you're going to see this information is starting to flow into the price per unit is your income, gross income. And when we say how many units we want to sell, or we think we're going to sell, the software will start calculating an income statement. But suffice it to say that you got some major pieces are how much the product you want to sell it for, how much does it cost to make, and the difference between the two. That's easy math. $4,000 gross profit. From that $4,000, you're going to pay salaries, utilities, rent, all kinds of expenses, right? And then after you pay all those expenses, you're going to wind up with what's called net profit. It's a very simple calculation from a macro perspective, right? So as a business owner, that's what you want to be thinking about. Then when you want to get into the details, that's boardroom conversations between you and your managers and your specialists to figure out, hourly wages. So if I go to this screen here where it says salaries and wages, you want to be thinking about, well, if I want to run this kind of a business with 4 parts, and these are the numbers that I'm generating with regards to my income, my cost to manufacture, expected fixed expenses like salaries and rent, what my net profit is. Okay, well, how do we get to the fixed expenses? I say, well, how many people does it take? Right? You get it, you're creating a business, and now you're asking yourself, well, what does it take to run this business? Well, I need factory workers, I need managers. Okay, full-time, part-time. Okay, how much do I pay these people? What's the market saying for, let's say, a factory floor manager? What does that go for? How much do we pay them per hour? Are they full-time? Are they part-time? How many of them do I need? So this type of a template will help you break down those pieces and start to understand what it takes to staff a business, right? That's almost, common sense, if you will. And it's just a matter of line by line. You just go line by line, ask yourself the question, take a break, go to sleep, wake up the next day, look at the next line and ask yourself, what does it take to get to where we want to be? And then go onto the internet and find the numbers for what you want to pay people. We're not going to make it. We got 4 minutes. But but then you've got like things like taxes for wages and stuff like that.
Yeah.
An important part to answer the question the young lady asked earlier is how do where do I put the money to? What do I have to do? So this type of startup funds required will tell you, okay, you make a list of everything that you're going to need to get the business off the ground. Make the list. It's very simple. Make the list. And what does everything cost, right? If you do that, believe it or not, you're budgeting, you're forecasting, and you're doing it intelligently before you pull the trigger. Because if you do this exercise and you say, okay, this is what I need for money, I need $11 million, and this is how much the owners are putting in, this is how much other investors are putting in, this is how much I could borrow, and I'm at $11 million, I can do it. I need 11 million, I got 11 million. Woohoo, I'm ready to go into business. But if you need 11 million, but everything you pull together is 5 million, you're not ready to go into business. You need to do something else until you're ready to go, because you're just flop right out of the gate. So this exercise here, very important. It helps you, put on paper, what the reality is. Take a step back and ask yourself, can we do it? Fixed expenses, again, you got to know what you're in for. You got to list every possible expense that you're expecting to come your way, and you add up those numbers. And this tool that I'm showing you right here, it's all tied in with formulas, so that once you enter this type of information, you'll get an income statement, you'll get a balance sheet, and you get a statement of cash flows.
Yeah, Joe, I think we have to stop here. Unfortunately, this is a ton of information on financial statements. Like this worksheet, thank you so first of all, thank you so much.
Thank you, Joe.
Yeah,
Thank you.
like, this is a ton of information. You will be getting all of these worksheets to like think through. So like the one piece of advice that I could give for like having these conversations is like, investors look for 5-year projections, right? And what it is, they know all these numbers, your use of funds, your budget, try to get those numbers as real as possible. But your 5-year projections is just your thought process of how you think your business is going to grow. and that's a story with numbers. So just use that in perspective, like it's all assumption based. There's no right or wrong answer. They're just looking to see what your thought process is behind it. But this was really wonderful, Joe. Like, thank you so much for like all these basics. We're gonna share all this information, and I'm sure there's more questions that will come up, but if it's okay with you, I could share your contact information if anyone wants to reach out direct.
Sure.
Yeah.
Go to the YNET SBDC and ask for me.
Okay,
Or contact me directly, I'm fine.
awesome.
Thank you so much, Joe. This was great.
Thank you, Joe.
You're welcome. It was a pleasure to meet you guys. Good luck.
All right, thanks.
Stay well.